Welcome to Real Talk here. I'm your host, Ryan Matthews, with Jeffrey Klein and Justin Volpone. We are here with Market Monday for February 26th, and we're going to jump right into it. We want to see, as we bring to you every week, just an update on what the market's doing, what we're seeing from the trenches. And we like to bring in other experts in the field just to get a different perspective from us. So, Justin, thanks for jumping on today. We totally appreciate it. And just off camera, we were talking about what we've been seeing, especially since like the last 2 weeks, basically, since we've had kind of a little bit of a blip in the market with rates. So I guess from your perspective, give us like a rundown what you've been seeing so far this year in the last couple of weeks.
Yeah, so for the audience, I'm a loan officer, not real estate agent. So I've been in the mortgage business for 4 years now. I'm pretty heavily analytical type of guy. I kind of try to follow the economics as best I can. So ultimately, what we've seen is since the inflation report came out on February 13th, we've seen interest rates go back up about 0.5%. You've got some clients that are looking at interest rates in the low 7% again, and so a lot of what this caused is kind of a slowdown or maybe a little bit of a lift off the gas when it comes to buyer demand. When as we were transitioning into 2024, we were really expecting a hot and heavy kind of late winter, early spring buying season, and things were really feeling that way in January. And things have since slowed down a little bit in the last 2 weeks. Do you want me to go into data of applications and rates, or how do you want me to
Yeah, that's
guide?
what I would say. Like, what have you seen as far as like just with your rate app? I mean, obviously, we rates when this comes out is going to be probably different from when somebody watches it, but give us
Sure.
an idea of what you've seen with the rates, just how like the behavior over the last couple of years, like we were talking about, just how that's kind of changed and how you compare it.
Yeah. So, I mean, I would say from this time last year, interest rates are about 0.5% higher than where they were 12 months ago to now. I mean, at this point last year, we were pretty solidly in the high 5% for a very short period of time on your FHA, VA buyers, and then conventional loans were in the low sixes. I mean, 6.25 was a very good interest rate that we were giving clients at this time last year. Now we are in the high sixes. If you're getting the 6.75, 6.875, 6.95, depending on points and credit and what have you, in the conventional side, you're doing a pretty good job. You'll see your lower credit borrowers in the low 7%, unfortunately, but we're still seeing high amounts of concessions. Jeffrey and I have got clients right now that we're seeing 15,000, 17,000 of available concessions that are helping them get that down. We're doing temporary buy down. So there's still a lot of negotiating that we're using to help ease that interest rate fear and pressure of that payment. There's still an optimistic outlook that the second half of the year we'll see rates come back down. But all in all, in the last 2 weeks, we have seen new buyer demand slow a little bit. So we're seeing less inbound inquiries. We're seeing applications slow down. And it's only in the last like 10 to 14 days that we've noticed that. It's not come to a screeching halt. The sky's not falling down by any means. But, I would say in January, it was like, all right, holidays are over. The Christmas tree's coming down. Our leases are up in March and April. We got to get the family moving and get out of here before, spring break hits or whatever. So we felt a lot of urgency. And then, right around Valentine's Day when we literally saw rates go up about 0.5% in 2 days, it, you know, put a little bit of a break, if you will. So that's kind of what we're seeing from, 9,000 foot view, but, you know,
Excellent. Yeah, and that's what it seems like. And I like anecdotally, I've talked to a couple of clients, and they said the same thing. Like, hey, you know what? I'm going to sell. I really want to maximize. And then as soon as that happened, saw the potential rate drop push back. That's what they're saying. Like, whoa, okay, we're going to push the brake. So it's really rate sensitive that we've seen in some environments, but then there's also we've seen that where some people still want to transact even if they're not so quite rate sensitive.
yeah, I mean, I'm still seeing clients that, that are, I mean, I would say right now a very heavy portion of home buyers are first time home buyers. We're not seeing as much of that move up buyer that purchased during the COVID era of low interest rates that are in a lot of urgency to trade in that 3% rate for something in the sixes. But for that first time home buyer that is getting married, having their first baby, got a job promotion, those people are still interested in purchasing. And what we're seeing of those that are maybe on the higher income brackets um, is that they're used to the rate by now, I guess is what I'm trying to say, right? They're like, it's been this way for years. We've been waiting and waiting and waiting. It's not getting any better. We're tired of waiting. We just need to move on with our life and accept the reality for what it is. And when it comes down, we'll refinance. And for what I've noticed with those clients is that if the home is priced well, shows well, and it's in good condition, we are still seeing it be highly competitive. I had a client for the first time in over 2 years who offered over asking with an appraisal gap, no
Really?
concessions, and it was in coming soon status. Wasn't even on the market yet. And they bought it 10 grand over asking and said, we'll cover that if it doesn't appraise. I haven't seen that since 2021.
Yeah.
And they're first time home buyers. They were like, we don't care. We have the money. We want this house. We'll do whatever it takes. And they had three other offers in coming soon status. So I think it's like a two-sided coin, right? It's like on one side, it's like, oh my God, we're getting all this concessions and rates. And then on the other side of the court, it's like, you know, it's still kind of a frenzy if it's the right home, neighborhood, et cetera, right? So you've kind of got a mix of the two, which is important to understand how,
And
city.
Justin, to your point, we talked about this. I think I mentioned it last week. Is like to me, it feels almost like COVID restrictions, right? Like everyone was so pent up in their houses, couldn't do anything, and then all of a sudden they're like, "We got to move. We got to buy a bigger house. We got to do whatever. We know what the market is, but we just got to do something, right?" And so that's what it feels like to me right now too. It's like there's been this demand of buyers building up because again the rates were high, but now it's like that sticker shock is kind of worn off, and they realize like, "Hey, this is the new normal," and we realize we're probably going to be around 7%. And then that's just what I think, right? And then same thing for sellers. I think sellers are like, hey, we wanted the market to improve, but we have other plans. We got to move. I mean, Justin, my parents are moving, right? I mean, you did their
Yeah.
their loan on their new place, and for them, it's like, yeah, it's a sucky time to sell, but they knew that right now is the right time to move into their new place, and so um, ideally they would have sold years ago or waited a little bit longer, but it is what it is. They wanted to make the move now, so.
Yeah, I mean, life happens. Life has to continue to go on, and you can wait and wait and wait for the market to be perfectly timed. But at some point, like, it's never really going to be the perfect time unless it's time for what your situation is. And I would say over the last 6 months, there are less and less buyers, whether it's first time home buyer or not, that are like, wow, that's the rate. Like, they're just not shocked anymore. And I would say that that happens as long as there's a six in front of the number. What I've picked up on over the last two-ish years is that when interest rates get over 7.25, psychologically, it's like warfare in their minds that you can't get over it. It's like, oh my God. And when you look at a lot of payments, like 7.25 to 6.99 is like $35, $40 a month for depending on the loan amount, right? So it's not that big, but like that six in front of it instead of the seven is like the make or break difference for positivity, if you will. But
Yeah, like it. That I was going to ask you, and I'm glad you kind of said that on your own. Just like, what is the real difference between that type of like a 0.5% rate or a 0.25% rate? It's not dollars and cents wise, it's not that much, but there's something psychological that I think coming from a couple of years ago when we were in 2.5 and 3 and all that, like it's so much different that I think like there's people that still want to buy, but there is that kind of like line where at some point they're like, it's still not, that's still not good enough, like it's still too
yeah.
high at this point.
Yeah, and I think it depends on the loan amount. I mean, I've got a client right now that has an investment property that we did, and it's a $500,000 loan amount that she bought at 8.5%, and we're refining her to 6.625, and we were able to lock that rate in before these rates went up. But for that size loan, and that gap was $386 or $387 a month. So that's a sizable amount of savings. But if you look at a first-time home buyer on a $300,000, $350,000 loan, the difference from 675 to 7 is it's maybe $40 a month, maybe 50 at absolute most. And it's like every dollar does count. But if you wait 6 months, $350,000 home turns into 365, and now that $15,000 gap is now $100 a month when we were arguing over a $50 a month difference in rate, right? So it's kind of the whole point where it's like you just got to do it when it makes sense for you and your family, and not waiting for the market to make it the right time.
Right. And I was gonna let me ask that too. Like, so how, if you have clients that are on the fence, I'm sure you're seeing it the similar that we are. Say, hey, we want to time it right, but then if and when those rates do come down later in the year, how do you go through that with, as far as like, hey, if you wait, like, you want something to come down where it's not quite perfect right now, but then with the competition later, you're going to see more of those homes that are going to potentially have appraisal gaps, or it's going to be a frenzy. How do you walk clients and anybody through that kind of
Yeah, I
mental
I do
hurdle?
a pretty detailed consultation before I have somebody do an application because I want to truly understand everything about their financial situation as well as like what is it that's causing you to purchase. It's not just like, all right, let's get you into a mortgage and buy a home. It's very detailed in terms of like understanding like what is your family's goal. Are you buying because you have fear of FOMO? Is it because you just got married, you've got a baby on the way, your rent is increasing? Like what is it that in your life that's causing you to purchase? And some people are just in a situation where it's like they could be financially savvy where they understand that like these rates are going to come down and they understand the simple economics of supply and demand. We've had a housing shortage for 4 years that has no end in sight. And when you already have got some situations with multiple offers, and now you see interest rates go from let's just say 7% to 5.75, well, now what's going to happen? And some people can understand that it's like, all right, with lower rates comes a lower payment, but now you're competing and now you're going to lose out on concessions. You're going to lose out. You're going to pay more for the home. So it's trying to educate specifically first-time home buyers that like you've got two different fields that you can choose to play in. We can do this now while you've got a lease coming up in a few months. And if the numbers make sense, if you can afford the payment, you've got the down payment, you have the closing costs, or if you don't have the closing costs, we can get you those now. But if you can afford the payment, then it makes sense for you. If the payment scares you and we can't get you closing costs and this is a financial burden, you should wait. Or do you have family that can help? A lot of times first-time homebuyers are getting a lot of gifts right now. But if somebody can do it now, I'm advising them to do so. And I'm a perfect example. Like my wife and I were waiting and waiting until we could find something that was affordable. And it got to a point where it's like, we can't keep waiting. We got to do this or we're going to get priced out of this market. And my wife and I purchased we closed on our home in January. We bought it in November when interest rates were 8%. And then we closed in January because we were able to get a good deal that it was like a 2-week window that presented itself of a really, really good opportunity to get below asking, insane amount of closing costs. We got a temporary buy down paid for. We got all these things that we previously wouldn't have otherwise gotten. And so I try to tell clients, like, you have to pick your poison. Do you want to compete with 10 other people for the home that you fell in love with, knowing that you're not going to be able to cover that appraisal gap? You're not going to be able to pay for those repairs, but your payment's going to look good. Or you buy it now and you refinance later on when rates inevitably will come down. I don't know if it's going to be 6 months, a year, 2 years, but we can't live in this environment forever. And anybody that says 3% interest rates are never coming back has not looked at the chart of how interest rates have progressed over the last 25 years, because a lot of people forget we had 3% interest rates from 2015 to almost 2018. You had 3.25, 3.5, 3.75, but like we had it then and we had it again during COVID. What means that it won't come back in 5 to 10, 15 years from now. And even if not, 4 to 5% could, and then you just refill.
Right.
You know?
And so now, like looking back and having hindsight 2020, if you were to tell somebody who's, like unsure and they're emotionally like, I can't get over that hurdle, just feeling wise, how are you? Is it like, oh my gosh, we shouldn't have done that? Or is like, hey, it was affordable, it was the right deal, it was a house we wanted? Do you look back and be like, shoulda, woulda, coulda? Or are you just like, hey, we're already done, we're moving forward, and it was the right thing to do, and we're glad we did it?
You're talking about for us personally or clients?
Yeah, for you personally. Like,
no, I think I'm definitely glad that we did it. When we closed on our home in that neighborhood, we had quickly saw inventory drop. All the kind of like concessions that were happening had then disappeared. I think we did what we did at the right time. We had to sacrifice, and this is conversations that I have with first-time home buyers, but we had to sacrifice location. We didn't get the 4th bedroom that we wanted we're trying for a baby, and I wanted to keep my home office. I wanted to keep a guest room, and I wanted to have a room for a kid. And it just got to a point where it's like, we can't afford 4 bedrooms. And if we want the 4th bedroom, we have to go even further from than where we already went out of our way. And so my wife and I just had to have a discussion of like, what are we willing to live without for 3 to 5 years so we don't get priced out? And then if we continue to get just average market appreciation of 4%, this investment will make us $75,000 over the next 3 years. Then we just trade it up and then we get the home that's the one that we wanted. And so that was the logic that I had to tell myself, which is also the advice that we all give to our client. And I am my worst client as an individual myself. I am a nightmare because I know too much and I'm analytical and I think too much. But, telling clients, it's like, you got to pick your suck. You know what I mean? Like there's always going to be something that you don't like about the time that you're trying to buy or sell. You just got to figure out what problem you're okay dealing with and which one you aren't with, and just look at all of it. And then you got to just make a decision and rip the Band-Aid off and move on. And just, if you've got analysis paralysis for too long, you're going to miss opportunities that are in front of you, thinking you're going to find a better one that may never come or may never exist. So that's kind of the logic I try to educate clients on.
I love that. And Jeffrey and I have both seen that where both, I think personally and with clients, the exact same, where it's just like, oh my gosh, what do we do? And then you just have to and I've mentioned it on here before, but Tom Bilyeu has a quote, and I just love it, where you pick a direction, run 1,000 miles an hour in that direction, because if it's wrong, you're just going to be going faster. So you'll find out sooner if that's the wrong one, then you can pivot. But at the end of the day, sometimes you just have to make a decision, and
right.
There's going to be some sort of sacrifice no matter what. And like you said, pick your suck. I love that.
Yeah, I mean, decisions are just decisions. There's not wrong decisions. There's not right decisions. You just made the decision that you inherently felt was best for you at that time. And if it was the wrong one, then you'll learn from it and you'll grow, and hopefully you won't make that mistake again. And if it was the right decision, you'll be glad that you made it. And home buying is no different. And when we looked at homes for a very long period of time, every time I'd walk into something like, this isn't the one, don't care if the numbers work or not, this doesn't feel right. And when we went into this particular home and we knew the opportunity that we were going to get pricing wise, I knew right away, I'm like, this makes sense. Let's do this. And I told my wife, I'm like, I don't want to look at any other options. Like, I've been thinking about this for too long. Just rip the Band-Aid off and let's get this over with. And I think that's what a lot of first-time home buyers go through as well. I remember I had a client who was the son of a client that I dealt with during COVID. He's 26. Been living at home, makes a very good income. He's got $60K saved as a first-time home buyer, but he had too many options last year. And it was just like home after home after home. It was like, I like this house, but this one's better. But this one has this and this one has that. They're all giving concessions. They're all doing anything that he wants. And it just became information overload. And then on a drop of the dime, the market turned. And we went from these, high 6s, 7, 8% rates into December when we had low 6s. On FHAs, you could get high 5s paying a point. All those opportunities were now gone. And then he was kicking himself in the butt, and he's like, dude, I had all these choices, but I was just trying to find something that was better. And then he ended up losing out on all of them.
Yeah.
And eventually in January, he was able to find something that fit, but he had to pivot in a direction that he wasn't initially wanting. But because he almost kind of got a little, I wouldn't say greedy is the right word, but he was just thinking that, well, I've got all these choices. I'm just going to keep waiting until I get more choices until the one came. And then it kicked him in the butt for it. So,
Right. And I think, it's like, I'm going through that now with a couple of clients where, there's the opportunities are there. And ultimately, like we always talk about, like, we can't make somebody make a decision. Like, we can provide them the data and say, hey, based upon what you've said, I'm providing you what seems to meet your needs. And ultimately it is one of those, like, you just have to make a decision, because ultimately, if you're too indecisive, then your decision is like, I'm not going to do any of them. And then like you said, like, you miss out on it.
Yeah, you absolutely could. And, I understand better than anybody when it comes to making that housing payment. Like, I understand that it's like, hey, I'm paying $2,500 a month in rent, and this $500,000 house is $3,200 a month, and it's a big jump, and the house needs work, and it's not in pristine, perfect condition like these luxury apartments that are just slammed all over town. But there's just hidden costs and hidden value to owning real estate. And if I would have bought a year and a half ago, like I wanted to, I'd be sitting on probably $75,000, maybe $100,000 of equity, depending on where I would have done it. But I mean, in parts of Maricopa County last year, you saw 12% appreciation in some zip codes. And that was with 7 and 8% interest rates for 6 months.
Yeah.
And it's like, that's just hard, real data. That's, just look at the numbers. If it makes sense, if it feels good, you can afford it, do it. If you can't afford it, don't do it. That's like the only advice I would tell somebody to not do something is if you legitimately know that you cannot make this mortgage payment and it will crush you, even though you can qualify for it. That's the only time I would tell somebody don't do this. Like, outside of that, just you could just sell it. 2, 3 years later, you make a little bit of money, you sell it, you move on with your life, you refi. Like, you just got to do it. It's no different than signing up for a lease payment that's too much on an apartment. You know what I mean?
Yeah,
Exactly. I love it. Couldn't have said it any better. Perfect.
Cool.
Well, any other parting advice you'd give for anybody looking to get into real estate, or if they're in something, potentially making something? I guess you've kind of covered it, but
Yeah, I think the biggest advice, and I think Jeffrey and I talk about this a lot with the clients that we work together, is if you're 6 months to 9 months out, that's like an ideal time for us to be having a conversation so we can put a plan in place. Specifically, this is the first time you bought. There might be things in your credit that we need to work on. You might need to save a little bit more cash. You might be considering a job change. Like all of these things are very good, helpful topics for us to have conversations on in an informational manner so you can understand how those things may impact you positively or negatively. And it doesn't cost you money for, the three of us to have a conversation with first time home. Even if you're a move up buyer and you're like, this house is too small, we're considering it, like, let's just put a plan in place and figure out what that strategy looks like. The sooner the better that you think you're thinking about doing something. So that's kind of my sense, is if an inkling of interest, let's figure out what makes sense.
perfect. I love it. And if there is that inkling of interest, where do they reach you the best? What are your socials? What's the best way?
So social media, I'm very active on Instagram more than Facebook. I post a lot of content just like you guys do to my page. So my Instagram is my first dot last name, so justin.volpone. Got a Facebook page. I don't use it very often. And then you can call or text on my cell, which is 702-541-0653. Phone number is Vegas area code, but I am local in Phoenix. So I would say that's probably the best. Is text or DM, call, and I'm happy to help.
Perfect. Sounds good. And we'll put everything in the show notes so you can connect. And then, we really appreciate your time. I know it's a busy Monday, and thanks for jumping on. And again, thanks for all of you watching. If this is content that you like, subscribe, follow. And that way you see it every time it comes out on Monday. Until next time, we'll see you later on Real Talk.